On October 11, 2022, Grayscale Investments LLC filed a petition for review of an order of the Securities and Exchange Commission in the U.S. District Court of Appeals for the District of Columbia for review of what Grayscale calls as discriminatory and capricious behavior by the SEC for approving Bitcoin Futures ETFs, but not a spot Bitcoin ETF. Grayscale operates a $12 billion spot Bitcoin trust product known as the Grayscale Bitcoin Trust, or GBT, and sought in October last year to convert its 8-year-old GBT into an ETF. If approved, the move would help to close the fund's discount to the net asset value. The ETF structure has a redemption process that is critical to keeping a fund's price consistent with its underlying holdings. The SEC rejected Grayscale's application on the grounds that the spot Bitcoin market poses the risk of market manipulation and fraud. Concern about the absence of a surveillance sharing agreement between a regulated market of significant size and a regulated exchange, and the role of Tether in the Bitcoin ecosystem. Apart from Grayscale, the SEC has also denied the applications of other major players in the crypto space, including ARC21 Shares and Wisdom Tree for the same reasons. The latest application to be rejected is that of Cboe BZX Exchange. While condemning the rejection and its basis in strong terms, the firm states in the opening brief of its lawsuit that the securities regulator has acted in an inconsistent manner. The test the SEC has applied to Bitcoin-related ETFs and only Bitcoin-related ETFs is flawed and has been inconsistently applied with a special harness to spot Bitcoin ETFs. Grayscale further argues the SEC's denial of Grayscale's conversion of Grayscale Bitcoin Trust, or GBTC, to spot Bitcoin ETF was arbitrary, capricious, and discriminatory. Indeed, the SEC has approved several Bitcoin future ETFs in 2021 and 2022. While both spot and future ETFs are subject to the same risks and protections, based on the fact that they derive price using overlapping indices. Honing in on the SEC's denial of a spot Bitcoin ETF, Grayscale argues that stark arbitrariness cannot be justified or reconciled with the Commission's mandate to treat the like cases alike. Rather, it can be only understood as a substantive judgment on the merits of a spot Bitcoin investment, the kind of substantive judgment that is outside the Commission's authority. The Bitcoin Futures ETF, regulated by the Commodity Futures Trading Commission, or CFTC. Futures are a type of derivative contract agreement to buy or sell a specific commodity asset or security at a set future date for a set price. Futures are traded on future exchanges like the CME Group. A Bitcoin Futures ETF issues publicly traded securities that offer exposure to the price movements of Bitcoin futures contracts. A spot Bitcoin ETF operates on the actual price of BTC, with a common price capture mechanism being the mean average price according to multiple credible exchanges. Spot Bitcoin ETFs offer investors and retail players an opportunity to directly access Bitcoin by buying shares that track the actual price of the asset. It is this direct access to Bitcoin that has made the SEC be cautious about spot Bitcoin ETFs. The SEC is to respond to Grayscale's petition by November 9th. So, is a spot Bitcoin ETF coming in the near future? Stay tuned. Cheers.